Good morning. It's Market Day Report. We're so glad you're with us to start another trading week. All right, it could be an interesting week and for multiple reasons. But first, let's check how the overnight session went. We'll start with the corn market, and corn overnight, $4.29 a bushel, penny 3/4 higher. We go to soybeans. By the way, corn market trying to break out of a two-day losing streak. And when I say a two-day losing streak, we're not counting the overnight sessions. Soybeans, 8.25 higher on the November, 11.10. But look at January, really the most active at 11.24.5, 7.5 cents higher. Then to the wheat market, we'll start with the Chicago contract here. And Chicago, December 5.35, 7.25 higher. Hard red in the overnight session up 8, 5.27.25, top end of that trade range. Spring wheat higher. And what about cotton? Could they make the sweep? Yep, 64.01 up 39. You know, Brian Hoops is with Midwest Market Solutions. Brian, that's kind of how we're starting or at least starting from the overnight session. Any thoughts as we get ready to trade this week?
Well, good morning, Tony. No shortage of news over the weekend. And the biggest news, of course, is eight Democrats have crossed party lines to vote in favor of the Republican bipartisan bill, and we are going to see the government reopen, as some estimate as early as Friday, which I think is a good thing for everybody included, especially for markets, especially like corn, where we've had the government shutdown kind of derail all the positive export news that we had seen, a lot of the private export sale announcements that we had been seeing during the month of September. We shut everything down and didn't have that information, so it left corn kind of just to languish. Now, we were supposed to have a supply and demand report today. It got moved back to Friday of this week. That'll be 11 o'clock, and newswires are collecting their estimates, so we should have those tomorrow or Wednesday. But then we get the government open by Friday. We should get back to some of the weekly export sales, crop progress numbers, conditions reports, as well as those private flash sales that we had been looking for, especially in the case of the corn market. So I think overall it's a good thing for the grain markets to get back to more of a normal trade. Certainly the equity markets, the gold markets like it a lot this morning as they are up sharply because of the government shutdown coming to an end. We'll also have, benefits being restored, like SNAP benefits. We kind of had rumored that on Friday, and that helped to rally the cattle market as well. But looking at weather in South America, looks pretty decent overall. Argentina's a little bit drier right now, and they've caught up on their corn planting to be a little bit above the normal pace. They're going to get a chance to plant more corn, but they're going to need some rain after that. It is going to be a couple weeks of dryness without much in the way of extreme heat for Argentina. So, overall, looks like it should be a positive start to the session this morning. Hopefully we can build on that as we look forward to Friday's supply and demand report, which should show at least the corn market yields coming down and ending stocks probably tightening just a little bit.
Yeah, we're also finishing off here with the equity markets, the Dow, NASDAQ, and S&P all coming off of two-day losing streaks. So a bit of good news there. Brian, I found one other interesting thing in this Senate CR. Again, it has to be passed by the House now and also passed or signed into law by the president. But this cliff we've been looking at the end of the year without a new farm bill would be, well, we would be able to sidestep it because Section 5002 will extend the Ag Improvement Act programs, basically extending the Farm Bill for another fiscal year. So it does buy us a little bit of time there. All right, we'll take a quick break. We'll come back on the other side. We'll talk about the livestock markets. Could there be some choppy action this week? Hang on, find out. This is Market Day Report. So let's talk livestock markets. You know, we've got a lot that's happening on the fundamental side, and we have a lot happening on the technical side. And then we have quite a bit that happens on the, well, social media side. I don't know where you really drop that in, but let's jump in with the live cattle market from Friday. And we were higher across the board. The December at 221.15 up 237, 297 higher on the February with $3 plus gains April, June, and August. And then on the feeder side, November up 395, 326 even, really settling a little higher than halfway between the low and high for the session. January, a little more active at 319.12, up 352. We saw gains again across the board. And then to the hog market, where we've seen losses now for 2 straight sessions. The December is the wild card here. It did settle 65 higher at 79.62. Let's bring back in Brian Hoops with Midwest Market Solutions. Brian, notice I didn't mention a whole lot about cash trade, but we did have cash trade last week.
Yeah, it was steady to a lower go, about $4 softer, $2 to $4 softer in the Southern Plains. So a little bit weaker cash markets there. Dress basis also a little softer. And calls this morning, I think we're mostly steady type of trade to get started with. I thought maybe this government reopening would be positive for the markets. We restore some of the SNAP benefits. We get things kind of back into more normal type trading. And we saw evidence of that on Friday, where we opened higher, absorbed a lot of selling, tried to rally once again, absorbed more selling where feeder cattle were actually lower into the mid-morning hours, and then rallied late in the day to close higher. So I thought that was all positive from a action standpoint, and the news was kind of positive coming out this morning with the government reopening, but there's quite a bit of selling starting to show up on the screens this morning. So I thought we'd open stronger. The screen tells me we're going to open maybe $1 to $2 softer in the feeder cattle and maybe $1 lower in the live cattle. So it'll be an interesting day from the standpoint if we can absorb that selling that's going to take place on the opening and move the futures back higher. If we can clear that opening range, we may see the futures market try and rally and recover here. I thought we were in that process, but maybe there's enough of the trade that is uncertain about what's happening with the government and the uncertainty there that they're just going to head for the sidelines and get out of long positions.
Also, over the weekend, we had the president with another social media post saying it's time to take a look at the 4 big packers, the processors, if you will, and throughout, I believe monopoly was in there. I'm not real sure that was the exact way he phrased it, but the idea that maybe the attorney general needed to get involved, could that affect the markets at all this week?
Well, yeah, I think it could, and it probably would be somewhat positive. I thought to kind of get the focus away from the farmers and the ranchers that they need to bring prices down. They don't, they can't impact prices like that. The only way to do that is increase supply, and we just don't have the conditions right to increase supply at this point in time. So looking at the Packers, I think they've done that before to see if there's any collusion, and usually that's not the case, but you never know. I think it's just a situation where the supply and demand fundamentals got very bullish here in a period of time, and prices, in fact, did move higher compared to pork and to turkey. But really, when you look at it from an inflationary standpoint, beef prices really aren't that much higher today than what they were 10, 15 years ago.
Yeah, good point there. And finally, a glance over on the energy side here. West Texas Intermediate back up above $60. Has the winds have the winds changed here for crude oil, or are we ready to go higher, or are we just holding our own?
It feels like we're kind of just treading water to me, that we maybe can move a little bit higher into the top end of the trading range, but seasonals are lower in here. Demand usually starts to soften quite a bit as we go through the fall months. So I'm suspecting we're going to pull these energy markets back to the downside here before too much longer.
All right, we're looking at diesel. We'll wrap up with the nat gas market as things get quite a bit cooler across the country. Brian Hoops Midwest Market Solutions. We'll see you back here on Wednesday.